Hi guys, this is Irfan here from smartyincubator.com and welcome to another video. In today's video, I'm gonna do a little bit of backtest for you guys. It's not gonna be that long because if you watch my previous videos, you know what a strategy I'm always using, and I'm gonna do the same thing right here on GBPUSD. As you can see, I'm on a 5-minute time frame and in a specific session. So I'm not going to every single session to do a backtest for you. I'm trying my best to do the backtest during New York session and also London session. I don't personally trade London session, I trade New York session, but I go there as well to show you exactly what happens during a specific time frame. So it's not going to be that long, as I said. It's just the same concept: high probability order blocks or high probability supply and demand zones, and those were the same Fibonacci retracement levels. So this is what I'm personally using every single day and I'm seeing success with that. I'm in the process of FTMO challenge, as you're aware of it, and I made 5% out of 10%. I have 2 weeks left, so let's see what happens. I'm also using an EA to help me pass the challenge. I'm using actually both manual trading and automated trading, and I definitely keep you posted, guys. So without any further ado, let's get into this backtesting session, and after that I show you the results of Goldie Incubator. But this is really obvious, I don't really need to show you because you have the link and everything is down below in the description, and you know that we are almost 50% up in profit on our brand new account, and we closed March with 50%, yeah, almost 48.78% profit, and today is April 2nd. As you can see, we are 0.62% up, completely hands-free, guys. On a brand new account, we are $500 up, which is absolutely astonishing. So if you want to grab your license and try it for free, you know what to do. You can go to smartyincubator.com, and then after that, send us your account number, then we'll manually activate your account. So for GBPUSD, guys, I have this indicator here called sessions. This is very, very helpful because it helps me find all the sessions that I want. If I want to do something, if I want to check the time, I want to compare it to mine to make sure that I'm waking up in a right time every single day. But I'm not checking it every day, obviously, because I know when New York session starts in my time, it's 6 a.m. in my time, which is 8 in the morning. And the New York Stock Market Exchange opens at 9:30, which affects NAS 100. Okay, so if we turn on NAS sessions, you'll see that the blue one is Asia session, this one is London session, and these red ones are New York session. So right now I'm in London session. So as you can see in London session on GBPUSD, when you zoom out, you'll notice that you have a bearish trend because of these lower lows and lower highs that are created, and then after that we had a very strong breakout structure below this one. So see, lower lows, lower highs, lower lows, lower highs, and then after that major breakout structure towards downside, and then after that it did a little bit of a correction. Actually, this correction caused this breakout structure as well, which can go towards upside. So right now it's kind of consolidating, and it's not it's neither going up nor down, and there's so many good things that happen right here. So if I want to do a back test for you, a little bit of replay for you, sorry, you'll notice that we have this high probability order block from here to here. I always take the last two candles. If I want to, if it's bullish, I take the last two red candles. If it's bearish, I take the last two green candles. But in this case, since we have a huge spike towards upside, I always consider the last bearish candle, which in this case is this one right here. So the last two candles are always better, but actually this is the high probability demand zone that we have, or high probability order block, the fancy name for that. And in this case, you know that the price is trying to reach this level to grab all the liquidity. Guys, I highly recommend you to watch my other videos as well in terms of liquidity grab, high probability supply and demand zones, and also all this stuff that I'm doing every single day. It's gonna help you a lot, I can promise that. And then right here, we have this support level here, which this candle never tapped below this level. So it means that there is still so much liquidity sitting around this area. And if you don't know what liquidity is, guys, is buyers or sellers stop losses. So in this case, when the price is going up, there are so many buyers who took their buy position here and put their stop loss below this level. So in this case, we have so much liquidity, and when this price, when the candles are trying to go down, you can assume that it's trying to reach this level, to tap into this level, to break below this level, to grab all the liquidity and then change its direction. And it didn't happen. That's interesting, because it got so much close to that, and then after that it had a huge spike towards upside. And then in this case, when you know that you have this high probability demand zone, you just need to wait for the price to tap into this level, and if it gives you a really good confirmation for a buy, then you take your long position. And if I want to do a little and if I want to move forward, you will notice that, or before that, if you switch your time frame to 15 minutes and identify all these breakout structures, you can also use your Fibonacci level to see where the golden zone is for a bearish market. Because we have these breakout structures, it's very red, and it started from here. The drop started from here and it ended here. See, this is my this is where I started, and this is 0. So golden zone is going to be here. And this is exactly where this candle got rejected. This is beautiful, guys. And in this case, look at this. I'm going to delete it. We have this golden zone here. We have a bearish engulfing candle here. And a lot of people take their sell position here, put their stop loss here, and also they know that this is a high probability order block, so they close their trade here, which is a 1-to-1 risk to reward ratio trade. But if you want to take your trade here after this candle close, you need to take your profit at least here to make it a 1-to-1 trade. But let's see what happens if I take my sell position. Okay, as you can see, it hits the profit. It was so close to tap to hit my stop loss, but it didn't. It just went up, didn't break above this candle right here, and then after that it came down. In this case, I had to put my stop loss here. Well, my TP here, it would be a 1-to-1 trade. But and no, this is not 1-to-1, this is 1-to-1. And then after that, you'll see that we had a huge spike towards upside. So there's one thing that people make mistake about. So this is the 1-to-1 trade that I take for selling using Fibonacci. It had nothing to do with supply and demand zones. I just used my Fibonacci level. And if I want to remove this, and let's say that we didn't want to use Fibonacci level, we just wanted to wait for the price to tap into this level, and then we take our buy position, this would have happened. So let me just delete this one. We take this candle into consideration, and then you see that the first candle that tapped into this zone is this one right here. Let me show you. Is this one right here. See, this is the first candle, and this is a very good candle to take a buy position. And I would personally take my long position here, but this is where most people make a mistake. Sometimes I do that as well, which is sometimes it works, sometimes it doesn't. But you shouldn't put your stop loss below the candle. It has to be below the zone. See, it has to be below the zone. If it's below the candle, I would have got to stopped out right here, because this zone is still valid. This candle tapped into this level, and then I take my long position here. I put my stop loss here, and obviously my TP is going to be here, which is 1-to-1, and I get a stopped out. But whereas this area, if I move my stop loss below the zone, then I need to kind of widen my TP as well, which is going to be right here. Then I have free room, I have more space, and I can just let the market breathe, and then it can hit my TP like that. See, it literally tapped into my TP by just giving it more room and more time. And if I want to show you, if I want to tell you the hour, it's actually 6 in the morning. It kind of happened late, but it did happen, and it's really working, because this zone is valid. Then you take your long position here, you're kind of going according to the trends, but sometimes I get worried about this liquidity grab as well. Sometimes I think that it's a trap, and when it actually tap into my golden zone, I really think that it's going to tap into this level to stop out all the buyers and make this order block invalid. But in this case, it didn't. So it doesn't really matter, guys. You know that if the plan can change all the time. You should never ever be biased towards your setup. It can change all the time, and in this case I'm going to remove this level because we are not gonna go for this level anymore, but we still have this liquidity right here, and we take our one-to-one trade. So after here we still have this high probability demand zone. There's another high probability demand zone from here to here. Look at this, guys. We have a breakout structure above this candle, and this is the last red candle that happened after this huge spike. And if I want to draw the entire candle, you'll see that this is the zone, this is a high probability order block, and after this spike there's a gap between the next candle after that and this zone here. So this gap makes this order block a high probability order block, or I would say a high probability demand zone. So again, you know that we have the liquidity. You could assume that the price is trying to reach that level to stop out all these sellers right here, and the only thing you need to do is just to wait for the price to tap into this level, which did. And now from now on you just need to wait for the candle to close and give you a better confirmation to take a long position. And if I want to show you, see guys, we still don't have any confirmation. A lot of people take their actually put their buy limits right here, and they put their stop loss here and also their TP right here, but they don't know that they might get stopped out very quickly. Whereas if you wait for the candle to close, and then after that you wait for the next candle to close above the previous candle, then you have a way stronger confirmation and there's a less chance to get stopped out. I'm not saying zero chance, I'm saying way less chance. But in this case, as you can see, this zone became invalid immediately, although this candle closed above the previous candle. See guys, this candle closed above the previous candle, so we have a strong bullish engulfing candle. But if you pay attention to here, you'll see that we have a wick that is outside of this box that made this high probability order block invalid. So in this case I don't trade it, I just remove this zone, and then after that, even if it goes up, I don't care because it made my zone invalid. And also look at this, it made the zone invalid, and then after that it had another liquidity grab right here, because this candle literally wicked this out, and then it shouted towards the upside. And then we have this liquidity that is grabbed, because look at this, this is the liquidity grab and it's already grabbed. Look, all the sellers got stopped out here. Now it's the turn for these ones right here. But this is a really cool one. As soon as your zone gets invalid, you need to delete it, guys. When you see that, you need to remove your zone. But if you want to trade support and resistance level, then you can just, you know, wait for this one, say, okay, we have a really good support right here, and we have this one right here, and then after that we have this liquidity grab here, then you can take your long position. So if I take my buy position here and put my stop loss here after it is stopped out this one, and then I can confidently take my trade. But I personally don't trade support and resistance levels, that's why I just don't trade it. But if you want to trade support and resistance, this is how you do it. It doesn't have anything to do with high probability supply and demand zones. And then right now there is no high probability order block. Okay, so in this case you just need to wait for the price. A lot of people say, oh, okay, so we have this last bearish candle right here from here to here. So yes, because it actually could work, but let's see what happens. See, it became invalid immediately. So that's what I'm talking about, guys. When you see such a thing, you need to change your plan. Now this candle became a high probability supply zone, because if I want to draw it, you see that I drew my rectangle through the entire candle that happened, the last bullish candle, and see that now this is the high probability demand zone. And also, since we had this breakout structure here with this bearish engulfing candle, this is a super bearish engulfing candle, then you kind of need to change your bias. So I usually put my alarm here, so when the price hit this zone, then I can actually get notified. And as you can see, it really happened like with one candle, but it's still valid because this is the entire candle, this is the top, and it never broke above this candle. So let's see what happens after that. Let me just do this. Okay, so we have this one. You know, there are a lot of people who take their short position here, put their stop loss here, and their TP right here, and see, we get a stopped out. There are two reasons for that. The first reason is that this candle never broke below this previous candle. So because we had a very strong bullish engulfing candle, this has to be as strong as well. Or the next candle after that should break below this candle. So it happened, there's nothing wrong with that, it's still valid, it's just a lost trade because this candle literally broke below the previous candle, and if you take your sell position here, put your stop loss here, you still get a stopped out, and that's totally fine because you followed everything properly. Sometimes you get a stopped out. It's not 100% accuracy strategy, right? But in this case, this candle should break a below previous candle, and it has to be stronger than that. But since we have this candle right here, there's a less chance that it happened, and everything is happening during London session. So now this is New York session, guys. And this is exactly when I wake up in the morning. So, but since we had so much consolidation and it was NFP week, this is what is happening. It's March 31st. And everything is going crazy. And again, you know, it's just a backtest for this video to show you the accuracy of order blocks and how you can effectively use them without using any indicator, guys. Have you seen one indicator that I'm using on this chart? Nothing, just pure price action, which helped me a lot. And if I want to go back and find you know, random order blocks, random high probability supply and demand zones, I can literally do that. Okay, so I can see a very clear one, and I just want to give you 5 seconds to find it. Exactly right here, from here to here. Where do you think I can find my order block? Yes, exactly right here, from this candle to this candle. See, because we have a break of a structure, very strong break of a structure, and this is the last bearish candle that happened after that. And then we had this huge spike right after this bearish candle, and then this candle, which is the candle after that, never tapped into this level. So that's why there's a gap between here to here. So that's why it's a high probability order block. And in this case, you just need to wait for the price to tap into this level, and it did. It literally tapped into this level. We had a bullish engulfing candle. Now this is the best opportunity to take your buy position here, and because you know you don't want to put your stop loss here, it's too far. In this case, you put it below the candle, and then after that you see that if you leave a runner, you could have taken a, you know, beautiful 1-to-3 risk reward ratio trade, or just get a 1-to-1 regular 1-to-1 trade, which is still absolutely crazy. That's the power of supply and demand zones, and you can easily trade it with no bias. You just go according to the trend, you find high probability supply and demand zones, and you're good to go, guys. I'm definitely going to make more videos like this, to just do a random backtest, to find random order blocks for you, to show you that this strategy works, guys. And I highly recommend you to watch my other videos as well. And I hope that you liked the results of Goldie Incubator as well. You know what to do if you want to try it out for free. And if you have any question, don't hesitate to drop your comment here, or you can personally reach out to me and I answer your question. So thanks for watching this video, guys. If you like this video, give me a thumbs up, subscribe to my channel, and see you in the next one.